Financial calamity averted and Filo Mining raises $100 million. You're listening to Kitco Roundtable, sponsored by Snowline Gold. I'm your host, Michael McCrae. Paul Harris is here. How you doing, Paul?
Hey, Michael. Very well, thank you.
And with us is the president of Minera Alamos. It is Doug Ramshaw. How you doing, Doug?
I'm good, Michael. Good to see both you and Paul.
There is so much to talk about, Doug. There was the big story at the start of the year about cost inflation and managing projects. Minera manages a lot of projects. We also want to talk about generally the financing scene out there. First, let's start with a personal question. What vacation are you looking forward to the most, Doug?
Actually, it's one in 4 years. So, I don't think it would probably matter where it is, but I'm just taking my family to Vancouver Island for a week. And it will probably, with 2.5-year-old twins, I will probably want a vacation from that vacation when it's all said and done. But it's going to be good to get away for 7 days.
If you're taking your 2-year-old twins up to Cape Scott in mid-August, I might run into you on the trails there. I've been warning people that if you like your bears, you'll really enjoy North Vancouver Island. Paul, where is your vacation that you're looking forward to this summer?
We are going to Panama. We're going to be sort of touring around a little bit, so a bit of jungle, bit of beach, that kind of thing.
Doug, bring us up to date. What's Minera Alamos focused on?
Well, I mean, we're focused on getting our first mine, which was one of those low-cost ones, which less sensitive to inflation, kind of up and running the way we'd like it. Open pit heap leach should run on rails, and it's been a bit of a squeaky times. Big news, obviously, this week for us was, getting a lending package in place for our second mine we plan to build next year. So we announced that just the other day, a $25 million debt and royalty package for Cerro de Oro, our second mine. So very excited that we can at least address the question of how are we going to build this low-cost mine, even if it's still somewhat permit related, dependent. Hoping to have those permits back early in the new year, around the end of this year, to allow us to build that and add the second mine to our portfolio.
Stepping back, though, Doug, Minera is a Mexico specialist, I believe, and it's kind of building small projects in stages up.
Yeah, I mean, we've always focused there. The team's built a number of successful mines in Mexico. We like Mexico, despite a lot of the noise that we're seeing with headlines as we go into an election year. So there's always a lot of noise and populist rhetoric. We still think it's a very mining favorable place to operate. And the cost for both building and operating mines down there are excellent. And so, we will in time, I'm sure, look to add a second jurisdiction, but very comfortable with the portfolio we have in Mexico right now.
Let's talk macro. It was out of the frying pan into the fire sort of week for financial markets. Just to note, we're recording this June 2nd, noon Eastern time. The U.S. staved off credit default midweek when Speaker McCarthy was able to corral a fractious party around a deal. Investors were warning of default would be calamitous. However, we ended the week with news that the Fed will not welcome job growth in May, reaffirming the labor market's strength despite worrying economic data elsewhere. U.S. employers added 339,000 jobs on a seasonally adjusted basis, the Labor Department announced today. Expectations were for around the 195,000 mark. Federal Reserve officials are expected to leave rates unchanged at the mid-June meeting, but fresh jobs data might make the choice harder. Gold dropped, although not far. Last check, gold was at the 1960 level and silver was at the $23 level. Copper traded sideways this week, held down by economic worries, particularly China. Last checked, copper was at the $3.70 pound level. Let's turn to mining, but first, our sponsor, Snowline Gold, ticker SGD on the TSX Venture and SNWGF on the OTCQB, is a shining new light on Canada's Yukon. They are actively exploring dozens of targets on one of the territory's largest mineral portfolios, covering 280,000 hectares. Snowline is going big. They are focused on a district-scale greenfield gold discoveries, and they're well on the way to finding world-class gold deposits. With an aggressive 18,000 meter drill program underway, the team is focusing on advancing their Valley discovery, described as one of the most significant discoveries in Canada in a recent history by Beta Gold's CEO Clive Johnson. Snowline is backed by some of the best That includes Beta Gold, Keith Newmar, and Crescat Capital. Follow the 2023 exploration program at sunlinegold.com, ticker SGD on the TSX Venture. Paul, let's start with those two big pieces of news from Filo.
Yes, Filo Mining stunned a lot of people. Came out with $100 million bought deal financing private placement with Lundin Family Trust and BHP, which this morning they've upsized 30% to $130 million. All the money seems to be going to at the moment. Filo also announced assay results from holes testing 4 different zones at its Filo del Sol project in San Juan, Argentina, with a highlight of 1,365 meters, grading 0.42% copper equivalent in the Bonanza zone. A lot of other copper news in Latin America. Also in San Juan, Aldebaran Resources reported an intercept in a geophysical anomaly under its Altair deposit, with an intercept of 1,056 meters, grading 0.56% copper equivalent, including 951 meters, grading 6% copper. Also in Argentina, copper exploration and development companies, including Filo and Aldebaran, formed a working table to press their case for federal and provincial government policies to facilitate the development of a copper sector in the country. Argentina could run the list of copper-producing countries with 1.2 million tons per year of production possible in 7 projects, which represents billions in investment in addition to tens of thousands of jobs. Argentina has presidential elections in October. In Ecuador, Solaris has confirmed the discovery of a second porphyry center at Warintza East, where drilling returned 301 meters of 0.65% copper equivalent. In Ecuador, President Guillermo Lasso signed a community consultation process decree paying for mining, infrastructure, and other projects to advance and complete their permitting. This should allow projects such as Adventus Mining's El Domo, Dundee Precious Metals' Loma Larga, and Attico Mining's La Plata to continue their permitting processes. Leading stainless steel producer Outokumpu has taken a 9.9% stake in Nickel Exploration Junior, FPX Nickel, at a 40% premium, including first offer offtake rights. FPX is advancing its Baptiste nickel project in British Columbia, Canada, preparing a feasibility study. This deal shows that it's not just battery and automotive companies interested in low-carbon nickel. Finally, while the US debt ceiling crisis has been averted, at what cost, ask environmentalists, as the Fiscal Responsibility Act saw Republicans push through a gas pipeline deal and change jurisdictions for court approvals. President Biden agreed to expedited approval of all permits needed to complete the 303-mile Mountain Valley gas pipeline from West Virginia to North Carolina.
Doug, I'd like to bring you back. You mentioned it at the top of the interview, but maybe we can flesh it out a bit. Talk about the stages at Minera Alamos and some of the build-out that you're doing. When you're talking to Paul, and that was about 5 months ago in London, you were excited about the cash generation from this build-out.
Yeah, I mean, Santana has demonstrated through 3 quarters of last year that it is a high-margin operation. I mean, we were consistently producing at about $800 an ounce direct cash costs. For our liking, our shareholders' liking, we weren't producing enough. We were prudent during a multi-year drought, which has come to an end. We can see that in our weather data now. And so, production this year is going to be back half weighted, but we're expecting to start seeing more of an upward trajectory again after making certain decisions during that drought to ensure that the balance sheet was strong. And as for the next mine we plan to build, that has life of mine AISC of, sub $900 an ounce. And I think in the first 3 or 4 years, it's sub $800 an ounce. So again, high margin, low cost operations. And I think for our operations, the low capex builds as well. I mean, the mine cost us $10 million to build. The next mine's going to cost sub $30 million, and that's why we put together a $25 million non-equity funding package for that. Little benefit in many when you have quick payback on low capex projects, you're not as well, you can approach the funding side from maybe a slightly higher cost of capital than if you were building a $250 million mine. Result, have much more flexibility on the funding package associated with it. So it served us well. It was, I think, always a smart business model, even before the inflation we've seen hit the sector. We're quietly confident and sometimes loudly confident about the future, especially as we bring on Cerro de Oro next year.
So I just wanted to come in and talk a little bit about the financing, because for me, one of the things that stands out about the financing you announced, it included a $10 million royalty. But the unique thing about that royalty is that you have a pathway to basically buy it all back.
Yeah, I mean, royalties are a polarizing topic, right? There are people that get it and people that hate them. And even the ones who get it probably quietly hate them. It's a different form of dilution. It's asset level dilution. But I think if you have one where you can actually have the ability to buy it back, in many ways, even that royalty money kind of serves as bridge finance rather like the loan that we had. But I mean, there are lots of royalty companies out there making lots of money on as royalty cos, and that tells you that there's a market as a path for funding traditional royalty markets. We didn't work with a traditional royalty company, and as a result, we had the one thing that a royalty co will never want to give you, which is a buyback. Occasionally, you see a step down in a royalty at a certain production level, rarely a buyback. And I think that this serves our shareholders very well that we were able to structure it this way. I don't think there's anything bad with royalties, so long as they're, not over the top and that there's ability like we have, just in similar ways to hedging. Hedging is like a dirty word. In reality, I think it's just prudent from a balance sheet perspective. If you have debt out, maybe you hedge a bit of your. Now, once your debt is no longer on the balance sheet, I think you should give your shareholders every opportunity to have full exposure to the movement in gold price. But there is a time and place where I think having a certain amount of hedging maybe is a requirement of your. It wasn't in this case, but it should be something that a company considers regardless. But again, it can be a dirty word like royalties. So yeah, very happy that we have a large buyback. It's a 2.75% royalty, buyback 2% of it, and in fact, the royalty holder can even sell the remaining 0.75 back to us as well. So I think that's good for the long term, especially when we think Cerro de Oro can be much bigger than the initial mine that we're going to build there.
Well, one of the things that I really liked about your specific is that you have the ability to get that off your balance sheet. A normal royalty, you can.
Yeah, no, I'm for sure. And I mean, if we end up with a 0.75% royalty because the royalty owner doesn't want to sell the remaining back to us, we have the right to buy two back. They have the right to sell us the other. The reality is there are very few in Canada that don't have some legacy royalty that's above 0.75% sitting on those claims. So it's a very manageable level if that is what the encumbrance is royalty-wise on the project moving forward. So meantime, basically serves us as an additional form of almost bridge financing rather than long-term debt on this project, because I think in the PEA we put out last year, and I understand projects never look better than they do in today, but that was at $1,600 gold, had less than a 1-year payback. So even assuming that those numbers aren't quite that good, if we're in a $1,700-1,800 gold market or higher, I think the paybacks are probably sub 1 year. So you think $25 million. If you're taking a capital that's maybe 4% more expensive than someone else's capital, you're really only talking about $1 million of additional interest. And sometimes that's a price worth paying if it comes with very flexible terms, less caveat, less covenant rich aspects of that. So it's obviously much better than an equity raise in a very uncooperative market for us, broadly speaking, right now. And so I think it serves our shareholders very well.
Now, Doug, when you were talking to Paul 5 months ago, you said that you would not want to be building a big mine. Why?
Well, I mean, the problem with a big mine is it takes a long time to build. And, if you happen to be, imagine if you were building a mine in 2019, 2020, you started, you pressed, let's go. And they hit with a period of dramatic inflation. We've seen it time and time again amongst companies with 4 and 5 and 600 million capex numbers, huge cost overruns. Not largely because of this changing environment that we're in, economic environment that we're in. I mean, in reality, building a $25 million mine, if you have a 20% cost overrun, it's $5 million. It's annoying, but it doesn't create some giant funding shortfall, which we've seen these other companies having to kind of meet with, additional equity raises and the like. So, Cerro de Oro at, sub $30 million to build a 60,000 ounce operation. We could build 5 or 6 of those for some companies' cost overruns, not their capex, but just their capex overruns. So, I always thought that this was a smart business model back in 2018-19 when we started it up. I think I wouldn't want to be making big capital intensive decisions at a time where there's such economic uncertainty. And so being able to build smaller stuff, I think allows us to be far more nimble as a result.
Now, Doug, also in the same interview with Paul 5 months ago, Paul was pressing you on weak markets. I would probably say that the markets are probably even weaker right now, and there must be some opportunities out there. How does it look, Doug?
Oh, well, the markets are weak, that's for sure. And I think we're right on this cusp of, sell in May and go away, which is that going to drive the markets weaker for the next few months? Although I'll take some comfort in thinking that the last time any kind of consistent, performance in our sector actually came in May through September 2020. So maybe we have a second coming of that, which would make for a slightly better summer for folks. The opportunities are out there, and it, because everyone's beaten up, I think it's one of those things where you can at least look at it and go, if you're looking at a particular target company, in most cases, they're as beat up as you. So the math hasn't really changed. The opportunities are there because there are companies that are struggling with money. And so there are probably asset level deals. We're certainly always looking, thinking about, building another mine next year means, okay, what's going to be in the pipeline beyond that? So we're always looking. We looked at things last year that we ultimately didn't do. If they make sense for shareholders and for the long-term prospects of the company, we'll act. But so I think we're seeing it with the M&A amongst the majors. Hopefully we'll see some more of that, because I think there's nothing better than sending a message and making headlines with large M&A deals to kind of encourage investors in this space. There's potentially actionable deals on stocks that they hold in their portfolio or other things they want to trade. So I think we should probably see increased M&A this year. Certainly, normally when some big deals get announced, like Newmont and Newcrest, it tends to have kind of a domino effect, right? Like someone else has to answer the bell. In recent years, it's been Agnico growing from kind of almost growing into its own tier behind Barrick and Newmont, but really catching up the likes of a Barrick with some really, by their standards, transactions, which I think have transformed Agnico into really a go-to name in the space. So, that's, anything that can bring attention to a sector, which we always talk about, like the value of Tesla or whatever, compared with the complete value of the market capitalization of gold companies. You realize in overall money flow in the space, or in the investment space, how small the gold sector is. So, Anything we can do to bring headlines is good. And I think probably the best thing about the start of this year is not so much seeing some of that activity or seeing opportunities abound, but it's probably, I haven't run the math myself, but I would guess with the move back to 1900, 2000 gold at a time where inflation is waning, we're probably seeing the first margin expansion at the big mining companies, of any meaningfulness for several years, since that kind of margin expansion phase during that bull market of 2020. I think we had this kind of death by 1,000 on the operating cost side of things, with inflation out of control and impacting in costs, and gold price actually waning during that period of time when everyone thought, well, now we got inflation, why is gold not moving? Well, the strength of the US dollar is a tremendous headwind to that, and I think is still, when there's uncertainty as to whether we've peaked on the rate cycle, you're still seeing it, on a week basis based on headlines out there as that bit of probably the last remaining headwind to gold, because last year we kind of had crypto still kind of approaching all-time highs, and a start of a rate increase move, and gold had a lot that it was facing last year. So even though inflation was rampant, the impact on companies was pretty savage. I think that's turning this year, and I'm not a perennial gold bull by any stretch, but I do think 2023 offers a far brighter outlook for the gold sector than 2022 did.
Bring us up to date, Doug. How's the former Great Bear? Because that was such a big story in the mining circle earlier this decade. You were director of the company. Of course, it was acquired by Kinross for $1.8 billion.
Yeah, I mean, I think since last we spoke, Kinross had cut their maiden resource. I think they were pretty conservative with some approaches. There were parts of the LP fault that they didn't model a resource around that we always had done, but I think it's as advertised to date, especially when you look at their deep drilling. We know, I think everyone can appreciate that the open pit portion of Dixie is going to be a really phenomenal, high-grade, low-cost open pit that will last for very many years. But we also always knew, and Great Bear, it was tough because they're deep holes, they take a long time to complete. That system should run to great depth. And so the open pit itself will give way to, I think, what's going to be one of Canada's great underground gold mines. And I know when I was at the BMO conference in they just pulled a 1,300 meter, I think, was the vertical depth of 10 meters at 10 grams, where we'd never drilled. I think the greatest we drilled vertically on the LP was about 800 and something meters. So they've expanded that depth potential by 400 or 500 meters already. It will take a long time to infill that, but I've always believed that I will be long and gone from this earth, and Dixie will probably still be mined as an underground operation at that point. But so I'm very happy to see. I think the last thing you want is for there to be disappointment in drilling post selling it to another company. I think Kinross will be proven right for, the problem is the jury will be out for many years on that transaction, but I think there'll be books written about Dixie, like there are books on my bookshelf about Hemlo and other great Canadian gold discoveries. Dixie deserves to be right up there in the same conversation as some of those. And I think over the next 10, 20 years, we'll demonstrate why someone needs to pen a book of the story.
Doug, just last on the segment before we go to a number of the week. Outside of Minera Alamos, is there any stories or is there any companies that you're keeping an eye on? You did mention the Mexico election that's coming up at the start, and then also Paul mentioned, I believe that there's an Argentina election as well too.
Well, I'm a shareholder of your sponsor that you mentioned earlier in Snowline. I'm a very happy shareholder of Philo that was also mentioned today.
Thumbs up.
And
Thumbs up,
And
Doug.
I recently bought some FPX. So there you go. I feel like confirmation bias. I don't know. I've done well in some lithium. Well, the main lithium player I got lucky on, Patriot. I think that's one of the big bits of money that I've profited on that I've put back into my own company. But my most recent buy was FPX. I don't have enough nickel exposure in my portfolio. I've certainly got enough gold exposure with my Minera holdings. So I was very for Martin Turin and the team there at FPX on the deal with Outokumpu.
I appreciate both you and Paul being able to pronounce Outokumpu. So thanks for being on the podcast with me. Let's turn to our number of the week. Guest goes first. Doug, what's your number?
Well, given you gave me a few hours to come up with this, I'm going to go 50. And 50, a very good friend of mine, a friend of the industry, a guy I gave his first job to back in 1995 and has excelled in this space. Jim Paterson, principal of the Discovery Group, turns 50 this weekend, and I'm driving out to Vancouver to be there with a dear friend and also the best man at my wedding. And so it is mining related. It's all I could come up with in the last couple of hours. But you know what? 50 needs to be celebrated. I couldn't. Mine was during the lockdown. I look forward to spending time with good mining friends and Jim on Sunday in Vancouver.
Good number, Paul. What's your number?
Well, first, please pass Jim my best regards. I first met and worked with Jim over 20 years ago. My number is a little bit bigger. It's 22. That's 22 billion US dollars, and that's the potential investment that the 7 copper projects in Argentina that I mentioned before would entail or could entail to bring them into production. That's Pachón, Los Azules, Jose Maria, Filo del Sol, Mara, Taca Taca, and Altar.
Keeping with the 50 theme, my number is $55 a pound. That's $55 a pound. Spot uranium prices continued with a steady rise, with the latest assessment at $55 a pound, the highest since April 2022. That number comes to me from BMO Capital Markets Research. America is passing more legislation to support nuclear power, namely the ADVANCE Act, to support efforts in the development of US-backed nuclear technologies. I should also note year-to-date, the Cameco is up 30%. That's it for us. Doug, any milestones at Minera Alamos you want to highlight over the next 12 months?
Oh, I'm excited for some of that we're doing right now. All eyes should be on us demonstrating we can start improving production rates at Santana, and then the big game changer for the company around year end will be that permit at Cerro de Oro. So we'll cross our fingers that comes in a timely manner. And you always want to be a multi-mine assets company, so that's a big one for us.
Follow me at Michael McCrae. That's McCrae with 2 C's on Twitter. Paul is at Paul Harris Gold. Doug is a very good follow on Twitter. What's your handle?
At Doug Can. DOUGCAN.
Paul, you have a Mexico mining show coming up.
Yes, in February in Puerto Vallarta, a 2-day event focusing on the copper, gold, and silver. And next, in about 10 days' time, we have our Ecuador conference in Quito, looking at the same sort of thing.
If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of Doug Ram, Paul Harris, and myself, have a pleasant weekend.